Good morning, guys. Hope everyone has had a lovely week. My name is Samson Mzera, and I will be taking you to today's market snapshot. So, as usual, if you can hear me, just say hello in the comments while we start, and so that we can get this going. So, there is not a lot to talk about today, but I will start with the charts, and then we go back to the news just to see what's happening. So if you can hear me, just say hi on the charts while we start. So in front of me, that's Euro USD, and you're trying to see where the dollar is going to go from here. So as you can see, the charts this week look very similar. And if you look at, for example, Euro USD, you look at GBP USD, AUD USD, you can see that there was this reaction that we had earlier in the week over here. So there was this huge spike that we had witnessed. Just a minute. Yeah, so there was this huge spike that is almost on all charts. So if you Euro USD, GBP USD, AUD USD, if I zoom out, let me just get rid of this. If I zoom out for AUD USD, same thing. UK oil, it wasn't there. This is funny. Oh yeah, it should be here. Should be here. Yeah, it's this one. No, this was yesterday's. But anyway, we'll still look at that. And then gold, obviously, we had the same on H1. There was this move and this move, and then US 500. So what's happening? Last week, CPI sort of changed the narrative or sort of affirmed the narrative. Hey, Jeremiah, I'm seeing Mana, I'm seeing Luca, JKM. I think you're starting to see a few guys here. So I hope the analysis has been helping, and also you're able to do your own technical analysis and just compare notes. So there was a huge reaction earlier this week based off of the CPI. So this was Thursday, this was Wednesday, this was Tuesday. So CPI came in on Tuesday and we had that huge reaction in the markets. The assumption is this affirms the position that the Fed is done hiking. And so we might start saying goodbye to the strong dollar that has been wreaking havoc in the markets and even locally. So that seems like a good sign. And so we'll have to do some technical analysis to see, are we going to continue going higher? Are we going to continue going higher? Or should we wait, for example, for the market to rest a bit? That means to come back down a bit before we see a continuation upwards. Or what exactly is it that you're supposed to do? So we'll go through these charts. So first, let's continue with the calendar. Then we come back. Then we come back here. So as you can see on, where was it? On Tuesday, that's when we had that reading that came in very low. On Wednesday, we had mixed news. So we were anticipating things to be red across the board, but it was sort of mixed. PPI came in negative as expected, but retail sales, although it came in positive, better than expected, it still indicated that retail sales and activity in the US was going down. So that's sort of a clearer sign that makes us believe that we might continue seeing a weak dollar. So that's something to be very careful about when you are talking about the long-term fundamentals, of which that is the topic for today. What are the long-term fundamentals of the dollar? And there was a nice article with regards to that on ANG, I think, in terms of where do we see the dollar headed to in 2024? As you know, the year is coming to an end. So that's one of the things that you should be having in mind. Where do you see the dollar heading to in 2024? And that can form a basis for, shall I say, your bias going forward. So this is taking longer than expected. Okay, we can wait for that too. I think my internet is very slow. Anyway, so if we are to read through this, I know this was probably a huge reaction in the markets. So you're still talking about this move. No, this was a very huge reaction in the market. But then throughout the week, we came in and we saw other speakers from the Fed trying to sort of saying that they're still going to be very tough on inflation, even though it's coming down. So now that's the problem with such types of reactions. So yeah, they're saying Fed Mr. wants much more evidence that inflation has been defeated. So remember, inflation on Tuesday came lower than expected, and it was actually very good for the markets. But then here they're trying to make us believe that probably they still need more evidence before they start saying we need to go easy on interest rates. Remember, interest rates is what has been driving the markets higher. Interest rates is what has been making the dollar strong. So if a Fed member comes and says we still need more evidence before we start thinking of cutting, then that should be expected. That means despite the data coming in that shows inflation is cooling off, I think it's expected that they're going to talk tough for as long as they can so that the market is not too excited. Yeah. And that's why if you look at these charts, there's this reaction and then the market just went sideways after that. So in most of them, we had the reaction and then it was quickly muted. So let me just remove this. We had the reaction and then quickly it seems as though that effect is dying down slowly. So that can explain why we've not seen further moves upwards. And to reinforce this opinion, if you look at unemployment that came in yesterday. So yesterday there was unemployment that came in Thursday. So unemployment isn't really that important, but you can see that from the reaction, so it came in negative, which was supposed to make the dollar weaker. But from the reaction, we found that it was almost cancelled out the following few hours. So if you look at, for example, Euro USD, yesterday when the unemployment news came out, we had this small reaction and then quickly it was just faded away. So US dollar was weak for a short period and then it was faded away. Now, two reasons to explain why we are not going, or it might be very difficult for us to go higher, although that's where the market should be heading to. Number one, if you look at the euro and the eurozone economy, there's still signs of or talks of a recession, and generally euro and pound, the eurozone and the UK, we have weaker economies than the US. So that's a cause for concern with investors. So you're not going to see a very sharp trend in euro USD going up. Remember, we had a downtrend and now you're expecting an uptrend. Yeah. So that uptrend is not going to be very dramatic. It might be there, but it might be very slow. So that's one thing to look at, especially if you're trying to trade the trend. So for both euro, the way you're seeing it over here, we might want, for example, a pullback and then we continue going higher, but in a very slow manner. So it's not going to be that aggressive. At the same time, we don't expect the dollar going back to these levels down here. So we don't expect the dollar, unless there's something very dramatic that happens, but we don't expect us to see the dollar coming back strong and making the euro fall all the way down. So the euro might rise or it might remain stable where it is, but you're not going to see a very dramatic uptrend. So that's one thing to look for. But then again, this is still an uptrend and we are still trying to follow the trend. So that applies with GBP USD. We had this, so on the 4-hour time frame, we have this push upwards. I have marked this place here as a previous supply zone that was broken. So if at all we see the market falling to this point, then it might be an interesting area to see if buyers will come back to the market. So that's for GBP USD. Okay. One is saying can't hear me. If you can hear me, just say hi again on the chat section. If you can't hear me, also say so in the chat section. Let me see. So Joseph is saying hi, so I'm guessing I'm audible now. I hope you can hear. Anyone else who can hear me? Okay. Matilda is also saying they can hear me. Okay, then let's continue. So Stephen, just adjust your speakers maybe, or try and restart the live stream so that you can hear me clearly. Okay. So you're still talking about the fundamentals and how they relate to the technicals. And we are saying that, yes, we are in an uptrend, but the UK economy is looking weak. The Eurozone is looking weak. So we might not see that dramatic uptrend that we saw, similar to the downtrend we had when the dollar started being strong. So yes, we'll have an uptrend because we expect the Fed to start cutting, but we should be very careful because it might not be very quick. It might be even a gradual trend with many sideways markets. So that's one thing to watch out for. So with the technicals, these are my key levels. Oh, one thing I've forgotten with Euro USD, the areas I've marked in red, their zones I've marked in red at 1.08 and 1.0825. 1.08 and 1.08. So it's a quiet Friday. So I'm looking at other ways to trade the markets. So those areas are, if you go to FX options, are where we have the largest option orders for the day. So if you look at this at 1.08, I hope this can be seen. Yeah. At 1.08, at 1.0825, these are areas where we expect the largest orders for the day. So they're going to act as key areas of support and resistance for the day. So remember, you can always use the options markets to gauge what are the key price levels. So it's saying FX options expires 17th November, 10 a.m. New York cut. So that's 6 p.m. local time. So these levels expire at 6 p.m. So they're only good until 6 p.m. Remember, daylight saving, it's usually 5 p.m., but now it's 6 p.m. So you can look for other orders for other pairs, but I'm mainly checking for Euro USD because it has the largest amount of orders on the market. So those are my key levels that I've marked in red. So I've marked my normal support and resistance zones in black, and then I've marked order levels from the options markets in red. So how do they react to such levels? Sometimes price will be prevented from going beyond those levels, or sometimes price will be attracted to those levels because of liquidity. Those are two options that you can consider. Either way, there are areas you'd want to see how price reacts on the charts. Okay, so I hope we have a clear, if you're doing your analysis and you want to compare, you can always just pause the video and then just see how your charts compare. Maybe you can add the levels and things like that. So that applies to even GBP USD and AUD USD. Now AUD USD is more interesting than GBP USD and Euro USD. You've talked about Euro USD, you've talked about GBP USD. So time to talk about AUD USD. I believe it's more interesting as a pair in terms of the long-term fundamentals. Remember, AUD USD is a commodity currency. Now, what happens when the world is GDP is improving is commodity currencies tend to outperform other currencies. G10, data financial conditions. I'm trying to look for the article I was reading in the morning. Yeah, 2024 outlook. So this is a report you can open for yourselves. ING markets, and then just look for this report. It's very interesting. Spend around, I think, 15 minutes. No, is it this one? Is it this one? I think it's a PDF. Let me see. Yeah, so you can spend some time go through this report. There are all sorts of forecasts for each currency. You see, like for Euro USD, you're expecting it to be in a range till the end of the year. So when they're forecasting it was at 1.08, they're expecting by the end of the fourth quarter of 2023 to be at around the same. So this is basically a range. We have USD JPY, some slight bearishness. So things are going to be very quiet heading into December, unless something unusual happens. So I'm just going through the forecasts. Euro JPY 163. Expectation is we move slightly lower. So you can just go through the analysis here and see what or how they've come about those interpretations and the likes. But one thing that stood out for me was USD CAD and AUD USD. So here they're saying AUD USD, the cheapest procyclical bet. That is, once we start seeing America cool off with them strengthening the dollar, then Australian dollar might be the best currency to go against the dollar, considering the Eurozone is in sort of a bad economic state, and also the UK is in sort of a bad economic state. So they are saying because Australian is a net exporter of commodities, then it has better economic fundamentals to really come on top when the world is recovering. Remember, Australian dollar has been held down by China because it exports a lot to China, and also the hawkishness of the RBA. But if those things start to fade away, then we can really expect a strong Australian dollar in 2023. So the forecast is by the end of the quarter, we might remain sideways, but we'll start going up in value for Australian dollar. So that's one really important currency to look at as a long-term trend upwards in the markets. Again, the site is thinking.com, think.ing.com, and then just go to, it's at the top, this report, FX Outlook 2024. So you can go and just spend some time, read through it. The best way to learn fundamentals is to read while researching. So if they say something here that's new, you can always go and learn about it. And then you see if it makes sense or if it doesn't. So this is one very important, especially if you're preparing for your year for trading for next year. This is one report you'd want to have a look at, just to see what are the opinions of in terms of fundamentals for analysts and the outlook. So if I go to the AUD USD chart, I'll start with the weekly here before you go to the daily. So you can see it's almost at the bottom. So let me just put this here. So 2020 was obviously COVID. So I'm using 2021 because this was a unusual event. So I'll just use this point here. So this was at 2021. So it's almost at the bottom half of that range, if you call it a range. So this is a very strong support level, and it's on that lower side. So if at all you are to start coming back up, then this is an interesting area to see if we'll have a reversal for 2021, for 2024, so that we start heading higher. Now, this is only right if the fundamentals hold. If we start seeing softening in the dollar, if we start seeing improvement in China, because Australia, a lot of its exports go to China. So if the Chinese economic situation improves, then we'll start seeing the Australian dollar coming back up. So that's one way to look at it. For shorter term trading opportunities, now you have to distinguish shorter term and longer term trading opportunities. For shorter term trading opportunities, these are the levels I am looking at the moment. We have this 50% level over here. I'd want to see if we will get way into this zone here, and if bulls are going to come in, if buyers are going to come in from here. If not, there is this point I've even forgotten to plot over here that I will start with. So just timing for the Australian dollar to find a good buying opportunity, and then you can even hold this a long term, because you're expecting over the long term a bullish trend. So the cheaper it is, the better, or the more incentivized the buyers will want to get into this currency. So That's one thing you need to look at. Again, always do your own analysis and technical analysis, and make sure your technicals, the purpose of these streams is to just know what other guys are thinking, and then also try and reconcile it with your own analysis so that you have a clearer picture of what to do in the markets. So we've talked about Euro USD. If you've missed that part, you can always just go back for a rewind on the video. We've talked about GBP USD. We've talked about AUD USD. And now let's talk about oil, which is one of the major movers this week. Why is the price of oil in the Kenyan market bullish while you're shorting it on the markets? So, I mean, I don't want to. It's bullish because it's bullish. So, for the global prices, one thing you'd want to know is demand is driven a lot by China. Traditionally, the US was the biggest client, if I may say so, for buying oil in the Middle East. But then over time, especially in the past year, China has overtaken US as the biggest consumer of imports from Middle East in terms of energy. So the thinking in the market is that because the situation doesn't look so okay as of yet, because the situation in the UK in China doesn't look okay, that means the economic data isn't proving that the economy is recovering or growing very ridiculously. Then the oil demand, remember you need oil to drive industries and things like that, and the oil demand isn't looking very exciting, and that's why you have this sort of downtrend over here. But remember, before you get too excited about selling or continuing to sell oil, remember is there a meeting next week? There should be a meeting next week. OPEC. I think we expect a meeting next week. I haven't actually checked, but we should expect an OPEC meeting very soon. Crude oil inventories. Yeah, OPEC meeting is on Sunday, November 26th. So before you get too excited, so it's over here. Before you get too excited, let's see what the Arabs will say with regards to oil. Remember the last time what happened is they said they will continue cutting, and then oil prices shot up again because they'll cut supply. So we'll have to see whether supply is going to affect it. Now, the first reason you said was because of China demand. The second reason was because of geopolitics. Remember, whatever was happening in the Middle East caused oil prices to go up. So either the market is shifting from we are afraid things are going to happen that are going to reduce the supply of oil to demand forces. So now you're focusing, the story is more on demand and less on geopolitics with the whole Middle East conflict thing. So I think that's what made oil to go up briefly. And because that story is now dying down, things are looking a bit normal. So what I would say, or what I'll expect, is for the better part of the year, we have been in this range. It's only that the Middle Eastern thing made us go above to the 90s, $90 a barrel. But now that that story is over, I expect personally to go back into this range. So we will just go back into this range again going forward. So you don't expect a lot of excitement that oil will go lower. I think anytime oil tries to go to 70, the Saudis will come and they'll say they're cutting demand again. They're cutting supply again, and that's going to push prices up. So that's the view on oil. Obviously, if more developments happen in the oil markets, we will talk about them. So for those guys who are looking at oil, I think that should be very clear. Let's see. XAU USD, this is a tricky one. I've actually stopped looking at it for the last 2 weeks because we are at 2000 And whenever we go to 2000, the market gets very, very choppy. So if you zoom out, the last time we were at 2000 was when the banking crisis was there. So remember when some US banks were closing down, we had fears of a financial market crash, and this happened. Gold went to 2000. So things get very choppy, and gold is back again around the 2000s level. So things can get very confusing here. I'm not going to lie. Expecting gold to go past 2000 is possible, but it's a long shot. So we'll just have to wait and see for gold. We've cooled off on activities on gold until we have a very clear direction. Of course, if we expect dollar to weaken, it doesn't necessarily mean gold is going to go above 2000. It might, but it's a very tricky spot for gold. So not very focused on that because the fundamentals are not making sense at the moment, in my opinion. For stocks and indices, we talked about this on the other stream. We said usually there is an end year rally. So most of the times towards the end of the year, stocks tend to go up because of, I don't know, excitement or something like that. So based on that one assumption, we might see stocks being or remaining at these levels. So this is US 500, US 30, and the likes. So you might see prices being elevated. That means we should be looking for opportunities. In the event we see the market coming back down, then that's when we look for opportunities. In the event we see, but chasing these prices higher might be very tricky. So yes, we expect them to go high, but chasing it high is a risky business because you never know when the pullback is going to come, so that now you have a good healthy trend upwards. Okay, so we've covered the main items. Let's see, USD JPY. Okay, I'll talk about the article again. USD JPY, let's look at that first. Okay, so I was reading about USD JPY earlier. Remember, for the better part of the year, we've said the Central Bank of Japan has a notorious habit of intervening every time it goes to 150. Every time the Japanese yen goes to 150, they come in and start selling dollars to strengthen the Japanese yen. But it seems like they have abandoned that, or they're not very keen on maintaining that. And that's why Japanese yen went past 150. Does it mean they might not intervene? No. There's still the possibility of them intervening. So we have to keep that in mind even while you do our analysis. In the meantime, though, let's see for our time frame. The fundamentals are still holding. We're still expecting, there's still a lot of capital flight from Japan because of the ultra low interest rates. So it's still within reasonable assumptions that we will remain elevated, or at least anytime we see significant moves lower, then we can have interesting areas to look for buys. That's an assumption because again, the Bank of Japan is still keen on maintaining its policy. So it's like they've abandoned trying to make the currency stronger. However, if we see the dollar getting softer over time, then this should correct more obviously. And I wouldn't want to price in a downtrend until we are clear at least past 148. If you're past 148, then now that's when you can start counting this as the beginning of a downtrend. And for the moment, though, anything above this support level over here, the assumption should be it's just a normal pullback, and you might just continue going sideways. Okay. Fed has insisted on higher for longer. If so, should you expect US stocks to rally? Yeah, that's the thing. We are seeing the data saying the opposite of what the Fed is trying to say, which I think, in my opinion, is very natural. So let's go back to that article we've talked about over here. So we are seeing inflation coming in lower. We are seeing the economy of the US starting to somewhat cool off. PPI even came in low. Now the problem is this ideally should make stocks go up because the market is expecting, yes, because inflation has come in lower, then the Fed should start lowering interest rates. But that isn't the case. When you start seeing things like this, comments like this, then it's going to affect the opinions for the market. It doesn't, however, rule out the fact that the Fed has this tendency to just talk and then not do what they're saying. So that's another way to look at it. Maybe they're just guiding the market not to overreact, but they are actually going to start lowering interest rates. Now, the market expects between May and June. So this is a chart of probabilities of when they'll start lowering interest rates. And if you look at May, the chances of them lowering year return is around 66%, which is way above the 50% expectation. So between May and June, that's when we expect cuts to start. Now, this is what is going to drive the markets into December, January, February. The fact that how early are they going to start cutting? So the Fed at the moment is saying the interest rates are going to remain like this for a longer period, while the market thinks they're going to start at May or June. So whatever news that comes in between now and then is going to affect whether whether the market thinks they're going to start cutting earlier or much later in the year. So that's how we are seeing things. But now the problem is, if we see interest rates staying higher for longer, it's not very good for the economy. So they'll be forced to cut at some point. And that's why any negative data that comes in has a bigger impact on the markets at the moment. Okay, having said that, I think we've talked about a lot. That's enough to digest for the day. Those who have attended, it's always nice seeing you interact in the chats. Next week, on Friday, we have a celebration at Skate City. It's in Parklands. I'll be there, so I want to meet some of you there. Also, we'll have games. It'll be fun from around 3 p.m. all the way till late. So you can always catch up there, Skate City. It should be somewhere in the socials, the registration link. So make sure to register first, and then we'll see you there. So there'll be games, cash prizes, all that good stuff at Skate City next week. And the whole staff, I think, for FX Pesa will be there. So it'll be a good chance to interact with guys. So see you then on Friday. Don't think we'll have I don't know if we'll have a market snapshot then, but yeah, can even do a market snapshot live. I mean, in person. So see you there, and then and that's it. So happy trading, and see you the next sessions. Oh, one more thing before I go. The link to the article, forgotten to mention that. The link to just go to let me just do this. Let me share this on the chats. Just a minute. Yeah, I think there you can find it. Yeah. Okay. There's that. And then what else is there? Fed for longer. How will Yeah, so it's the event is from 3 p.m. Just register. The link is in. Let me just copy the link also if I can find it quickly. But the link for registering for the event is supposed to be there. Let me see. Yeah, just find it on any of the posts. The most recent post for FX Pesa, you'll find the registration link there also. So make sure to register. even the previous market snapshot I did, the link is over there, but I'll try and plug it into this video after the live stream. Mayfield, it was just a single data point, and analysts are overreacting to NFP and CPI. No, it's yeah. For the inflation data coming in, yes, it has to be more than one data point that marks the market beliefs. But then again, you're not only looking at CPI, we're not only looking at NFP. Remember, we are looking at other indicators of the economy that are also showing that narrative that things are slowing down, including PPI, including all these unemployment figures. So anything that builds onto that narrative, and this is how you must be very careful in interpreting news. There is already this narrative that is in the market. So anything that builds onto this narrative is going to be reinforced. So if I think the US is in a recession and I see unemployment figures are higher, then I'm going to confirm my bias. So the market is going to use negative news as confirmation bias for that opinion that is circulating around. And if we see more negative news, then we'll continue seeing a weaker dollar. And that's how you're saying that trend upwards for Euro USD, GBP USD, AUD USD, that upwards trend and the downwards trend in USD CAD will be gradual because we'll be depending on the data to come in from, of course, our calendars. Okay, I think I've said enough. See you all in the next session and also physically at Parklands, City.